Top 5 mistakes people make selling options, and how to avoid them. Want to succeed with options selling? Then you need to avoid these 5 common mistakes that cost traders thousands. In this video, I'll walk you through the biggest pitfalls in selling options, and exactly how to dodge them like a pro. Let's jump in. Mistake number 1, selling too close to the money. A lot of new traders go for high premiums and sell options right at the money. But that means higher risk of assignment. How to avoid it? Choose strike prices with at least a 70% probability of expiring OTM, and focus on high delta puts or calls that give a better risk to reward profile. Mistake number 2, ignoring implied volatility. Selling options without checking fours like going skydiving without checking your parachute. How to avoid it? Sell options when 4 is high, not low. That's when premiums are juiciest. Use 4 rank or 4 percentile to time entries better. Mistake number 3, not managing winners. Traders get greedy and hold till expiration, only to get assigned or lose profits. Key emoji. How to avoid it? Set a profit target, for example, close trades once you've captured 50 to 75% of the premium. Lock in gains and redeploy. Mistake number 4, selling options on low volume stocks. Low volume equals wide bid-ask spreads equals bad fills. How to avoid it? Stick to liquid underlyings, ETFs or stocks with tight spreads and high open interest. Think SPY, QQQ, Apple, AMD, etc. Mistake number 5, using margin carelessly. Using margin to sell naked puts or calls might sound tempting, but it can wipe you out. How to avoid it? Start with cash secured puts and covered calls. Build a strong base before exploring advanced strategies like spreads or naked options. Options selling is a powerful way to generate income, but only if you stay disciplined. Avoid these 5 mistakes, and you'll be way ahead of most traders out there. If you found this helpful, hit like, subscribe, and turn on notifications for more options trading tips every week.